Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Wednesday, and we are now at October 7th, 2020 at about 6:15 p.m. Central Time. I am getting a haircut this week, so I will look better next week. What can I tell you? When you stay in, you become like a hermit. It's the weirdest thing. We've gotten very quiet suddenly in the metal markets, with the exception of copper, which has just been having one heck of a run. Now remember, it's the Golden Week in China, and during that week you don't get the trade going on. People take off the whole week, they don't hedge, they don't do anything. It's amazing. It just gets very quiet. So you have thinner trade than normal in that market. The gold and the silver seem to have just found a zone where they're fairly comfortable. And even the currencies have recently gotten quiet. What didn't get quiet, of course, was the stock market, with the president yesterday saying no more negotiations, and then 6 hours later saying, no, let's do an airplane deal, and maybe we should do another deal. In other words, piecemeal. I don't know if Ms. Pelosi, the Speaker of the House, is willing to do that or not. I think that it's a bonus for them to do whatever it is. They're going to end up looking good, and the airlines need the help. So we'll see. Small businesses need the help, and that's the other thing the president asked for. So once you open this floodgate, where does it stop? So why not just do a deal? And that's what many people are asking. Tonight, as you know, we get the Pence-Harris debate. We'll see how that goes. It's the only one of those, so you might want to see how that comes up, as our president is dying to get back on, I don't say that word nasty, but he wants to get back on the campaign trail as fast as he can. He was in the Oval Office, I read today. All right, so let's go to the gold market. What we've seen is the market has had a correction where it's come down from 2010 all the way back into the 18-day average of close area and got a bounce off of it. That's all that we've had on the weekly chart so far. And by the way, when I come to this chart, any close under this 1879.80 on a weekly basis would add to the bearishness. So what the market's got to do is fight that off. And you're not that far away. You're 1901. So we'll see what the market does. When you take a look at the daily bar chart, it's not that interesting right here. You've got a pattern of a higher high and lower low. That's not a trend. An uptrend's higher lows, higher highs is measured by the swing lines. You're not getting that right now. You made this higher high, then you broke down. So you're sort of in the middle of nowhere. When I look at moving averages, they're helping me. Now I'm starting to define better what's going on. You can define back here the test of the 100-day average, and that's where I told you I thought that the longer-term bulls were coming into the market, and those people just sort of sit. They'll actually add more if you go to the 200-day. They just play the game to last, and that's what it is. But as the market got off of that, it found its resistance at the 18-day average. It broke back down yesterday, actually today, and tonight you're just sort of up here. So you're fighting that battle between those two moving averages at this point. When I look at where the Bollinger Bands are, well, I guess if you broke through this 1876.20 with Verve, well, maybe that would carry you down to the 1847.90 level. If you got over the 1927, I still don't think that the Bollinger Band would be an immediate danger. It would take some big event in the world, and that can always happen, but that's what it would take. In terms of momentum, well, you've got it gradually pointing down again. So I've got the bias down, no trend on the swing line, and momentum pointing down. 2 out of the 3 are not good. The gold-silver ratio just sort of drifting, waiting for the 18-day average to come to it. You can see that. And as long as this stays over the 18-day average, it really means that the silver is weaker than gold. You need more ounces of silver to get 1 ounce of gold. That's the theory. In silver, like gold, you don't have a trend. You have a higher high, lower low pattern. Like gold, you got down to the 100-day average. You haven't been able to get up to that 18-day. If you did, that would qualify to tell me that I think you're caught in those two numbers right there. And momentum is just flat in the market. Where you have wildness is in the copper market. I mean, take a look at what happened here. This market went from 304.65 down 283.45, gets a bounce yesterday, not dramatic, but it got away from the lows. Watch this. Up and away you go over those highs. So the copper market, I would normally say, hey, it's telling us a story, things are getting better. And as a chartist, I don't look at the dates of a golden week or anything else. So that's where I'm at. I'm thinking that the support's the 301 level, but it's a heck of a risk back to just under 292. That's monstrous. I do know that golden week is going on. If the market wanted to rally, right now, support would be 312.61. And on pullbacks in the market, like maybe you get one tonight, look for the support around the 301 level. That's what I'd be looking for. Momentum is up too. That's in a bullish pattern. You're getting something bearish happening in platinum that I'd be cautious on. You're getting a bearish crossover where the 18-day average is getting under the 100. The strange thing is the seasonality at this time of the year picks up normally in favor of this market. I don't see it right here. What I see is a market that's got a lower low, a higher high. Momentum is just drifting, but the bias is down and I'm getting a bearish crossover. That means if the crossover is for real, the market should be able to get through this 855 level, making new lows, whatever that means. 815.20 would be the low Bollinger Band. It could be a target. It's hard to tell. The market that's bullish, and I've been telling you this, is the Palladium, but it is overbought. I would expect that this is going to weigh on the market unless it embeds. It hasn't been able to add to the past 3 day of gains. You can see that. If it did, the 2452 area would be the resistance, but it wouldn't surprise me to fall back here and just go a bit more into a trading pattern. But you don't fight the market. You don't fight the tape, as they say. It is an uptrend, but it is overbought. In the dollar index, the dollar has now had how many days just hanging here at the 18-day average of closes? It's trying to find a direction. Doesn't have it. I think you could say on the close tonight it has it. Let me explain that. Lower highs, lower lows. The settlement was under the 18-day average, and momentum is pointing down. So I'll correct myself. Going home, that is the pattern that you have. It is a bearish pattern until you take out 94.09. There's a possibility that if the market wanted to break hard, it gets to 92.71.5. And if it were to get over 94.09, you'd put in play the possibility of getting up to 94.76.5. Right now, the market doesn't want to put anything in play. It's just sort of drifting. So you put it all together, you got to come up with game plans. And this is where I use this tool. You know that I'm defining what trends are for you here, and I have a very certain way of doing it. But I also use other tools when I see markets that offer me opportunities. You get what we call lost embedded slow stochastics. Well, when that happens, I want to be a contra-trend trader. Where would I come in? A tool that I use is pivot point. The white line is the pivot point off the formula that I teach in a 3-part video. Everybody has this formula, and if you have any charting software that is robust, it's going to have this in there, but it's how you use it. You get your pivot, then you're going to get resistance point 1 and 2 and support numbers 1 and 2 as well, okay? You're looking to see if the market gets in these, and I'm going to just show you the 2 support numbers, 2 resistance. When the market gets up to a resistance point, the theory is you're a seller trying to get back to the pivot. If the market were to fall down to it, you're looking to get back up to the pivot. You'll see that a lot of formulas are used in algos are using this type of analysis to get an idea, is the market trending or not. You know, if you get beyond these numbers, one thing you can say is it stepped out of a normal day and you're going to maybe continue in that pattern. I see that often when that happens. Doesn't happen real often, but it's something to watch. What I did that's a bit different is I decided to tie with this the slow stochastic reading. So I'm looking for an edge. I'm looking for the market to tell me gee, if I want to be a seller of the market up at the first resistance, has my momentum turned down with it? Or is the market not paying attention to downside momentum? Maybe I have to wait for the second sale. But I explain all this in my 3-part video. Gives you a pretty good idea as to how to use this type of tool. It is not meant to be an overnight tool. It is meant for the person that's looking for those in and out swings during the day. How do you get this from us? Just go to our website. Under free offerings, it's there. You can give us a call on our phone line. We're picking it up. We have a whole new phone system now. So even when we're not in the office, unless we're sleeping, it's going to follow us wherever we go, record. It does everything. It's a phenomenal system. And in our new system, we could set up meetings just like Zoom. Right while you're on the phone with us. It's phenomenal as to what it does. But just give us a call or go to the site, sign up, take advantage of the other offers as well. I'm Ira. You have a good day, and I will see you all tomorrow.